Welcome to today's daily report market videos with me, Richard Perry, market analyst at Hantec, on Tuesday the 7th of May. Markets are responding to this news that from Donald Trump that he's contemplating pulling up the tariffs again. I mean, it looks as though that the US and China trade discussions are not progressing as Trump would like, so subsequently he's going to be using some brinkmanship, some bullying tactics to try and get China to come to his side of the agreement. And certainly looks as though that markets have had a significant reaction to this. What we saw was a fall in treasury yields. We've got the yen, which strengthened quite considerably. It's back below 111 against the dollar, and we also saw equity markets spiking around yesterday on Wall Street. Now, we saw a sharp move to the downside initially, then the market responded by buying into that on suggestions that the Chinese were going to still take part in the negotiations on trade this week, despite the threat of these tariffs that could be potentially coming back in on Friday. The threat to put tariffs on the 200 billion worth of Chinese imports into the US, up from 10% to 25%, and then that could be coming in on Friday, presumably if the talks don't go as Donald Trump wishes this week. Has the potential to really throw the cat amongst the pigeons, I think, in terms of market sentiment. What we have is equity markets just buzzing around, really. You've got futures on the S&P 500, which are shade lower, 0.3%. You've got a little bit of mixed outlook across European markets today. Nothing too significant in terms of direction there, but it'll be very interesting to see how this one develops. Now, what we've seen is the dollar, which has come under pressure since that, we had payrolls on Friday, which average hourly earnings missed estimates, and dollar sold off in the wake of that, and that's moved to the downside, has continued really, and is again a shade lower, but it'll be interesting to see how the dollar fares in this trade negotiation scenario this week. In terms of data points, you've got very little actually, but what we've had overnight is the RBA, the Reserve Bank of Australia, which could have been ready to cut interest rates in the event it didn't. I think consensus was there or thereabouts, holding sort of on the fence between holding and cutting. In the event the RBA held interest rates steady, and subsequently the Aussie dollar has jumped 0.5% higher against the US dollar today. Definitely the outperformer of the day on the Aussie there on the back of that RBA meeting. Basically, markets are sort of in a wait-and-see mode now, it would appear, but certainly we've got this the prospect of these tariffs going to be dominating, I think, sentiment throughout this week. So, in terms of data points today, the US JOLTS at 3 o'clock is the only number really of any note today. 7.23 is the expectation there. Now, my chart of the day is the DAX, which fell sharply on yesterday early doors and then rebounded into the close. But what we can see here is this broken uptrend. You've got sell signals which are now coming through. You've got the MACD crossover, RSI crossing back below 70, and the stochastics as well crossing negatively. So these are sell signals that or I'd take that as profit taking, profit triggers, which could induce a bit of a corrective move. Now, last few times we've seen the RSI pulling back from 70, what it has happened is to eventually come back towards the low 40s. So there is room for a corrective move on the DAX, and you could certainly see that this move coming back towards this uptrend in due course could well start to kick in. Now, the breakout of 11,865, that old long-term key breakout level, is a basis of support, certainly was back in early April, and there's a nice band of support between 11,865, 12,030 for the market to unwind towards. Now, there is a gap from Friday's trading, gap of 12,344, so that remains unfilled, and as yet the market hasn't reacted to that, but a failure to close that gap would be a negative move, certainly, and it would seem that with these momentum indicators rolling over, rallies could be seen as a chance to sell. You can see here on the hourly chart there's a bit of a pivot around 1250 area, 12,250, and the fact that this morning's early move has reacted to unwind the RSI back to 50, arguably now starting to roll over. That's a little bit of a concern as well. So a move back under 12,250, that would suggest we're starting to lose traction again and possibly to return towards that 12,135 reaction low from yesterday. So I wish you good luck in your trading today, and I will speak to you later.